Infinity Capital, everyone. This is Raj. So, in the Auto and Auto Ancillary series, today we are going to talk about Escorts Limited. Escorts is a very high quality company which is engaged in the manufacturing of agricultural tractors, engines for agricultural tractors, construction and earth moving equipment. So these are the type of equipments they make. They make equipments for the railway industry as well. So heating elements, hydraulic shock absorbers for railway coaches, center buff couplers. So these are the kind of products that they make. So if we come on their website, they are into agri machinery, construction equipment, railway equipment division. So these are the sectors that they cater to. So we'll just go through the rating as well. They have around 1000 crore of bank facilities. So this is rated at CRISIL AA, which is a very good rating. It is on the top 5 rating. So this rating is also pretty good. It always makes sense to go on the documents page here and find out what is the rating of the company. So they may have some short-term borrowings or short-term loans, commercial paper, or probably bank facilities like an OD. So it's good to check what is the rating given by the rating agencies. Now in a bull market, when things are going well, these ratings, companies with bad ratings also will do well. But this is a very important parameter to check when there's a bear market or markets are not doing well. So those are the times when you should be sticking around with these companies with good ratings. All right, guys. So quickly, let's do the fundamental check. It's a 16,000 crore market cap company. It's a mid cap company. All right. Promoters hold around 36% stake. FIIs have 26. DIIs have around 6%. So good amount of institutional holding and promoter holding. Public has around 30% of the shares to be traded publicly on a regular basis. The company generated around 1100 crores of cash from operations, which is very good. Okay, they don't have any meaningful borrowings, only the bank facilities. All right, and they have around 1900 crores of investments, 1300 crores of cash on the book, cash and cash equivalents on the book. So very strong balance sheet, looks very, very good. Okay, they've not done any significant equity dilution in the past 7-8 years. They did dilute some equity here, but that's not too meaningful. So when you click on the equity history here, you'll know what happened. So they did some preferential allotment to Kubota Corporation Japan. So this is a beautiful site, guys. You can come and check all these things. You can see the dividend history of the company. One other important thing to check for if the company is paying dividends regularly, because you can't pay out dividends from fake profit, guys. A lot of companies post fake profits, so dividends can't be paid. There are companies who pay out dividends from fake profits as well, but that's a different story. We'll talk about that some other time. The profit and loss, if you'll see, the sales are higher, roughly around 1200 crores from last year, which is commendable considering the fact that we've been having a pandemic, lockdowns, all sort of business problems, money problems, financial problems. Irrespective of that, they've managed to clock higher sales, higher profits. Profits are almost double as compared to last year. So last 2 years, the profits were pretty much stagnant, and this year the profits have doubled. Their margins have also increased. Fantastic numbers, guys. Let's look at the breakup where the sales and profits are coming from. So maximum contribution is from the agri machinery products, and then you have construction equipment and railway. So they draw most of their sales and profits from the agri machinery business. On a quarter-on-quarter basis, if you'll see, we have a 60-70% growth in sales, and roughly similar amount of growth in profits. If you check December with December 19, it's still higher. So good numbers, right? Annual numbers are also great. Quarter and quarter numbers are also great. Let's do a quick PE check. So the median PE is around 29. Stock is trading at around 18. So there is good room for the stock to go up. Even if it reaches its median PE, we can see a good 25-30% rise in the stock price. Let's do a technical analysis check. So what happened? If you see, the stock did not make a new low during the March pandemic crash. So this stock had already turned around before the pandemic. All right, and then it sort of broke down, but it did not break the August 19 low. Whereas if you'll see a lot of other stocks like auto stocks, they did break their 2019 low as well. So indicates that it's a pretty strong company. Stock went up by around 175% post the pandemic lows, and it is now consolidating between this range. This is the range it is consolidating in. So it has given you a 25% correction from the top, and now it is consolidating in this area. All right, let's quickly check the moving averages. So on the moving averages front, since the stock has been trading below the 50-day moving average for quite some time, so now the 50 has turned around, and the 200-day is sort of still trending upwards. Okay, so the long-term trend is up, medium-term trend is sideways, because if you see, since July last year, the stock has not gone anywhere. So since 13th July till June 2021, the stock is pretty much sideways, and that is the reason why this 50-day moving average is also going down. Now what is the trade here? So if you see, the stock is pretty much, this is where it was consolidating earlier. This is the area where it was consolidating earlier. It broke out, then could not go up meaningfully, and then it has come back down in this range. So according to me, this is a good area to accumulate the stock. This is a fantastic area to accumulate the stock. So I'll be picking up the stock when in this area between 1080 and 1170. This 100 rupees range is where I'll be accumulating this stock. And what should be the upside? So the upside should be at least 24-25%. Remember guys, this is a mid-cap company. So, we can't expect 100-200% movement in this stock. So we can expect a good 30-35% move in this stock, right? Because if the stock goes up by 30%, the market cap also goes up by roughly around 4,000 crores, right? So you have to take cognizance of such things. We can't have unrealistic expectations in the market. We can't expect, stocks to go up 100-200% every year. Last year was very easy. This year is going to be difficult, guys. So keep that in mind. What kind of stock you are buying? What can be the upside in the short term? So what is the timeline? I'll be keeping it for the next 2 quarters. We are expecting good monsoons that would result in good profits for farmers, and that would result in good sales and profits for Escorts. So going to keep it for the next 2 quarters at least, and we'll keep an eye out on the earnings and profits and see how this develops. Lockdown is also easing up, so we can see further traction in these companies. So when the lockdown was on, we saw that most IT company and pharma companies were doing well. But now that the lockdown is easing up, real economy, sectors will pick up slowly. They'll pick up slowly because these expenses are higher on the higher side. So a tractor or a car or a machinery is on the higher side. So people don't spend. People will have to make a decision. It takes time for them to make such decisions to buy a 5-7 lakh rupee machinery or a farm equipment. So it will pick up slowly. It is not going to be very quick. But if the market senses some good, sort of movement or sales, or if the market is anticipating some good news, then this can move up pretty quickly. It's a very high quality company, and the downside on this stock is protected, in my opinion. So this was the analysis, guys. Quick disclaimer, this video is for educational purposes only. It's not a buy sell recommendation, so please consult your financial advisor before you buy or sell any shares. Thanks a lot, guys.